Hey guys, welcome to Multitaskr. I'm Joe Frosto, CEO and founder of Multitaskr, a marketplace where we unite homeowners and the best service providers in your area. But today I want to welcome you to our podcast. It's called the Home Solutions Network Podcast, and we're going to be introducing the top service providers, clients that have used our marketplace, and some of the people that direct this company, and very exciting stories. The goal of the podcast is to save you time, save you money, give you insights, give you tips, and create value for your home. So come on in and let's check it out. Hello everyone, welcome to Multitaskr Home Solution Network Podcast, a marketplace where we unite homeowners and service providers. In this episode, I am sitting down with Morgan Hampel, real estate investor, U.S. Navy Surface Warfare Nuclear Engineering Officer, and co-founder of Clinic Note. Welcome, Morgan. Thank you for joining us today so our listeners can get to know you a bit better. Can you tell us a little bit about yourself?
Yeah, of course. Thanks, Joe. Super happy to be here. Really thank you and your team for the invite. So Morgan Hampel, from Minneapolis, Minnesota. Grew up in Minneapolis, went to college, Iowa State, bachelor's and master's. Once I finished up there, I joined the Navy. I got an OCS commission in 2015. So I've been active duty since 2015, 2 deployments, one in 2016 to Southeast Asia. And then my most recent one was back in 2019 where I was in the Middle East, like North Arabian Sea, Gulf area for about 10 months. Got back from that right before COVID. And I've been back in San Diego. With regards to real estate investing, I started investing in real estate back in 2017 when I bought my first single family home, and now I own a single family home, a condo, a 3-unit, and then a 68-unit apartment complex. So 73 total doors across 3 states over 4 years. So goals to do 150 this year. So we're working towards that.
Awesome, man.
Yeah.
Awesome. Well, thank you for being here.
Yeah, it's great to be here.
So active duty, you're a surface warfare nuclear engineering officer. That sounds interesting. So I'm going to make you talk about that a little bit.
A mouthful.
And then co-founder of Clinic Note and also real estate investor.
Yeah,
so
absolutely.
Tell me, if someone tells me I'm a surface warfare nuclear engineering officer, what does that mean?
So my specialty is nuclear engineering within the Navy. All submarines and aircraft carriers are powered by nuclear power. So anytime people hear my job title or the community that I'm in, they immediately think like nuclear bombs. That's not the case. That's not the case. So I worked on surface warfare. So all the ships are considered a surface warfare asset. So, and aircraft carriers are nuclear powered. So I was one of the division officers in charge of operating the nuclear reactors on board the aircraft carriers. So the nuclear reactor, creates heat, which creates steam. That steam spins turbines and drives the ship, creates electricity, and we launch jets so we can, put warheads on foreheads downrange. So, and I was one of the officers in charge of overseeing all the nuclear mechanics who actually operate the reactor.
Cool. That's cool. And then co-founder of Clinic Note.
Yeah, so
what is Clinic Note?
So back in college, me and a couple buddies, we always had an entrepreneurial bug. We tried to start a dozen businesses, failed a dozen times, and then about 6 months prior to graduation, our next idea happened to be the one that actually made it, if you will. So we got accepted into a startup accelerator, where our idea at the time actually kind of came to fruition. We started Clinic Note, which is an electronic medical record company. So it initially was with just speech therapists, but now as it's grown, it's now in speech therapy, occupational therapy, physical therapy, audiology. But basically it's a way of streamlining therapy notes to ease the process of creating progress reports. So progress reports, Vice. Billing is much different. Billing is very objective. You have this diagnosis, which correlates to this code. This code corresponds to this amount of money from insurance. But the progress reporting, so when you run out of essentially the amount of allotted appointments that insurance allows you, you have to prove that you need more service. So you have to basically summarize what you've done. So we basically streamlined that for the therapists so they weren't manually compiling all their notes.
That's cool. That's interesting. Awesome. And then real estate.
So I co-founded Clinic Note. And then back in like 2017, once I went active duty, or I guess I had gone active duty 2 years before, but about that time I had been away long enough where my role, I went from obviously a majority co-founder to more of like a board member, but then with, halfway through a deployment and then plus all the workup cycle, I had been pretty far away from the company. Mm-hmm. And basically I just had a conversation with the guys and we were going to go our separate ways. Still great friends with them, but they had to do another fundraising round and I didn't have much leverage anymore just because of based on my schedule. The military was my priority and needed to be my priority because I had people working for me as we're on deployment. So I ended up stepping away from Clinic Note. But when I did that, I still had that entrepreneurial bug of I really want to, work for myself one day. I love being in the military. I love serving my country. But, there's that other side of me that I still want to pursue. And real estate was kind of that answer in terms of it provides, passive income. It's the flexibility. You can really, there's so many different avenues you can take it with it. Mm-hmm. That wasn't, like the software as a service I was doing initially. So as I bounced from duty station to duty station, my goal was always, by the time I got out of the Navy, whether it be, 5, 10 or 20 years, I want to be able to replace my income with passive income. And when I first got in, that was going to be Clinic Note. Mm-hmm. But then once I went away, I was trying to think, what's my next best bet of doing that? And then after a little soul searching and research, and kind of came to real estate. So started in 2017.
2017. Wow. That's awesome.
So 4 years.
It's been 4 years and you already have accomplished what you've accomplished. That's great. That's great.
I appreciate it.
You move pretty fast.
I've been very fortunate to have a lot of great mentors and a lot of product of my environment, my experience. So it's by no means, my accomplishments are those of many.
Great. So what other benefits do you think have been, can you tell people for real estate investing?
Well, I mean, just as an investment strategy, like one thing, I always tell people that why everybody should invest in real estate, is one, just diversifying, not only just within, a lot of people, they invest in their 401ks, Roth IRAs. Those are all paper assets. Mm-hmm. So obviously you want to be diversified within your paper assets, but you also need to diversify within your asset class. So going from real to paper assets is very important. So specifically, one thing that's great about real estate is there is essentially almost a net zero probability of your investment going to zero. Unlike if you buy, 100 shares of Amazon, if Amazon goes under, or if whatever company you're investing in goes under, your shares are now worth nothing. But at a bare minimum, if you invest in a home or a 3-unit, or if you're a limited partner in a syndication like I put on, if we absolutely just destroy and do a horrible job of managing this, at bare minimum, you have the actual materials that are used to build the property, which has a value. So granted, like the return's not good and it's probably gonna be negative, but the thing is it's not gonna be zero, right? And even if like, okay, well, what about like storms or whatnot? Then you still have insurance, right? So the likelihood of actually losing your entire investment is just about zero. So that's really good. And then also just when you invest in your style in which you invest within real estate, leveraging and then depreciation is huge. So there's no program where I can, get $600,000 worth of stock for 20 or 25% of that.
That's very true. Yeah.
So it's, you get what you pay for with whatever stock you're purchasing. Whereas in real estate, you can leverage it. And then as that appreciates, you get that equity, you can leverage it some more. And it doesn't work like that with paper assets. And then also with the way the tax code is written, to incentivize investing in real estate, whatever and how you invest within like the shelter of an LLC, you can depreciate that on your base income. So you have a smaller, your gross income for that year is smaller, so you get taxed less. So it's kind of a way you make money by investing, but then also you make money by spending less on taxes because you have less taxable income. So there's a slew of reasons why I recommend investing in real estate.
Awesome. And what would be like, you would say like bad investments in real estate? Is there such a thing, or is real estate investing just all perfect all around?
Oh, I mean, there's definitely bad. I mean, of course, I mean, just like with anything else, it kind of depends on who you are though, right? So, I mean, if you go in and I do zero research and I buy this asset and it blows up in my face and I lose all my money, that's not necessarily I invested in a bad thing. It was I'm the bad player. Because, I mean, you could invest in that exact same asset. You know what you're doing. You come in with the money, the knowledge, the experience, and the team, and you can make that same investment work out. True. So, yes, there are bad investments, but it's not necessarily tied to what you're buying as much as I believe it's tied into the jockey.
Agree.
So,
Agree. How do you execute it, right? What is the best game plan to do with this asset, right?
Yep, exactly. And so the thing is, like, the three things that you need for like real estate investing, it's, knowledge, hustle, and money. Mm-hmm. And almost all people don't have all three. So if you're just starting out, you got the hustle. Well, now you got to find, the team, the mentor to bring you the knowledge. And then you have to market yourself and your business plan enough to bring in the money. Or if you're the money guy with no time, then you need to market yourself saying, hey, I'm ready to invest. And you have to find the right players to invest in the style of asset you want to invest in.
True. Agree. So I was going to ask you, like, what would be the main three characteristics that you could say, like, someone would need to be a real estate investor? But I think you just said it, you summarized it, right? But is there anything else you want to add to that?
The thing is also I would have to say, you got to mix in humility. I'm very, very humble in everything that I try to stay as humble as I can with it in everything I do. But the real estate market is very competitive. And there's a lot of ways you can mess up and you can learn lessons. And if you take it personally and you get discouraged, you're not going to make it very far, and you're going to get tired, and you're going to get tired of hustling, and then you're going to quit. So just understanding that there's like no such thing as real losses. It's just lessons learned. And it's really a mindset you have to go into it. Mm-hmm. And the more research you do leading up to your investment, the people you bring in with you, the least likely you'll actually fail at your investment. So, but then also on the other end, there's the wrong decision, there's indecision. And the majority of the time, the wrong decision taken like leaning forward is better than indecision. Because at least with the wrong decision, you're learning, you're growing, you know how not to do it. You'll make the next move. That may not be the right move, but I know now door A is wrong, door B is wrong. Door C might be it. But if you're just staring at door A, B, and C, a month goes by, 2 months go by, that asset's now off the market. Next one comes up. You're still scared because you have to reanalyze door A, B, and C. Now the people you just brought in to help you out don't think you're a go-getter because you're too scared to pull the trigger. You can do a lot of research, but you can never know everything. You don't know how it's going to come out. You don't know what the contractor is going to be like. You don't know the full like logistics, supply, and everything. So do research, but at some point you have to take the leap of faith. So, and then when you take that leap of faith, be humble enough to roll with the punches and see the project through.
Analysis paralysis, right?
Absolutely. Absolutely.
Yeah, no. And if you make a mistake, just learn from it. Right?
Exactly.
I mean, I forgot where I heard it like years ago, but I remember they interviewed this successful entrepreneur. I think it was a company in England, and they asked him, what would you say would be like the best advice you can give to anybody, right? And he said 70% is good enough. And he said, and they go, what do you mean? And he basically explained it, right? He goes, I've always told because he was 3 founders. And he's like, I always told my co-founders, I would be always the one pushing them and being like, hey, if it's 70%, let's just go. Because our competition is waiting for at least 85 to 90%. So by the time when they get there, we already failed enough to learn what we needed to do. We already beat them, And
exactly.
So I always kept that in my head, like, yeah, and 70% is good enough. Just go and figure it out.
Exactly.
And then be humble. If you make a mistake, you make a mistake. Raise your hand, say, I made it.
Yep.
What do I do, right? What do I learn from it? And then keep moving forward. So
yep, absolutely.
Yeah. If you can go back to when you started, what would be like the main thing that you would say that you wish someone would have told you? Would it be that, or would it be something else?
I think that's definitely a big part of it. For the sake of not answering the question the same, I would say there's 1,000 different means of investing in real estate, and I wanted to do them all because they all made sense. But what I didn't realize was when I first started investing, I didn't have the conversation with myself of what my like true goal was. like in my head, I had this like, utopia of like, oh, Morgan is financially free. Okay, sick. But how are you going to get there, right?
Yeah.
At first, I was like, okay, I want to do wholesaling. I was like, okay, well, wholesaling, what does that entail? It's a lot of marketing. It's a ton of lead generation. It's a ton of reaching out to sellers or potential sellers, not even sellers. They don't know they're selling a lot of times. And then you have to go about that way. And then are you going to double close? Are you going to, lease two, all these different things. And then figure out like what kind of business plan is that? And does that business plan match your skill set? Does it match your team skill set? And I hadn't thought about any of that. So when I first started reading all about wholesaling, I was super excited. And then I realized like, I'm not a marketing guy. So like when I bring in my team, I'm building up like our skill sets. I'm not the marketing one. So I was like, wholesaling, like for me, when I'm just starting out solo, probably not for me. And then I was like, well, maybe I'll do fix and flip. And so I started looking into that. I started reading I started reading all the stuff on fix and flip. And then I kind of realized like, I don't have the capital right now or the mental bandwidth to manage a construction crew. And so I wasted a whole bunch of time trying to do that. And I wasted, not only my own time, but the people I was trying to bring in for fix and flip, and then I ended up backing out. And so then I went on to buy and hold, which is where I bought my first property. And that worked out, and I learned a ton on my first house. But by going through that, I kind of realized like, you know what, if my goal is to get out of the Navy with a full passive income, or I guess enough passive income to replace my military income, then this isn't fast enough for me. So that's when I jumped into multifamily, where I kind of realized, I was like, okay, now if I would have had that conversation with myself, I don't think there's any reason why I couldn't have started here day one. But once again, going back to our thing a second ago, it's like you kind of roll with the punches of like, I tried this. I literally started an LLC. I like got a phone number. I got a website, built my business cards. I did everything besides like do the business. And then I realized I was like, this isn't the business I should be doing. I wasted all this time on doing this fluff stuff when all you really have to do is you just got to dive in, and then you can figure out the admin stuff along the way. But if it's not actually growing your business, like me getting like the GoDaddy domain or like getting the phone number and like doing all this other stuff so I look official at these like meetups, like that's all stupid.
Yeah.
Eventually you got to need it to like get some legitimacy, but like when you're just starting out, like you got to figure out what your real goal is and then how to get there, and then what business model and what investment strategy is going to help you meet that. And so that was like 7 conversations over about a 2-year period for me with myself.
Yeah.
So had I realized that, I would have started straight in multifamily on day one, but
living you learn.
Exactly.
Right?
Exactly.
No
So I wouldn't change it, but like if I could, then I would just go straight into it.
Yeah. Awesome, man. And so you started in San Diego, and now you're investing in multiple states. Like, what other states or where are you investing right now besides San Diego?
Yeah. So right now, I'm in San Diego. I'm in Charleston, South Carolina, and then I'm also in Iowa. So a little West Coast, East Coast, and Midwest right now.
Nice. So how would you say Iowa market compares to San Diego? What's the main advantage?
Different. It's different. So they're seeing. So Iowa market's a great market. They're seeing a lot of the influx from the post-COVID world of, hey, I can make a Chicago salary but live in an Iowa cost of living area with the work from home, I guess, generation that's now kind of kicked off. Mm-hmm. So they're seeing a really big influx with that, and associated with that is a bump in home prices and then associated rental prices. Also, like Fortune 500 companies are taking note of that too. Amazon, Facebook, Google, they're all building multi-billion-dollar data centers and work centers within Des Moines, which is where I'm invested right now. So they're seeing a ton of growth. It's not the appreciation that you would see here in, San Diego, San Francisco, Seattle, Denver, Austin, those types of cities. It's not a tier 1 city. But for where I'm at in my, multifamily syndication career, it's a great market where I'm not competing with these huge, at least a lot of the big institutional money where they have the flexibility and the means to compress cap rates down, 5%, 4.5%. So it's a little bit easier barrier entry when you're in the tier 2 cities that are still seeing a great upward trend.
It's probably more stable too, or like for your investing,
Absolutely.
right? Because
Yeah.
what I've seen, I mean, I've been in real estate for 17, 18 years, and in San Diego, it's super cyclical, right? There is a lot of appreciation, and so it does make sense sometimes to do flips and all that,
Yep.
especially when you're getting the cycle on the way up.
Yep,
But with
exactly.
multi-unit, it gets very expensive, and with areas like Iowa that you're mentioning, it's more stable, especially when big companies like Fortune 500 companies are moving in.
Certainly.
They're going to be hiring people with good salaries. They're going to be stable. They're going to be able to pay you on time. So
Yep.
it makes total sense.
Yep, absolutely.
Yeah. So, I mean, from what you're seeing right now that you've been getting more and more in real estate, like, are you worried about a cycle? Are you worried about, are there going to be changes? What are your thoughts with what's going on right now?
I mean, we are seeing an incredible growth from our essentially kind of a manufactured depression of the economy. Right now, especially in San Diego, right now, we're still at such a huge housing shortage that correction I don't really see coming for for a little while. Because as long as, supply and demand, as long as the supply is as little as it is compared to the demand, it's going to keep pressuring everything upward. I'd imagine there'll be a correction at some point in time. How soon, I'm not sure, but
Probably be a while.
it probably will be. Hopefully it'll be a while.
They do the budget.
Exactly. Yeah. But then also when it comes to timing the market, anybody who says they know what they're talking about, nobody really does. There's some people who have more education, less education, but in reality, nobody really knows. Nobody predicted last year, no matter how many experts said they, So when you try to time the market, you usually time it wrong. So when it comes to like investing in your normal like retirement, people say dollar cost average. So the same thing goes with real estate investing. If you keep on investing on a steady cycle, you'll catch it at the top, you'll catch it at the bottom, and it kind of averages out.
So the biggest strategy right now in Iowa, so you're focusing multi-unit, but are you building multi-unit? Are you buying and like, stabilizing them, or what is your strategy over there right now?
So we're not doing development. We have plans for that down the road, but as of right now, it's all resale value add. So we're trying to find basically the worst building in a good area. So the one we just closed on back in June is about a C plus asset in a B plus area. Basically the previous owner had purchased it and through, I guess, poor hires of property management managed to drive a B property down to the C range. So we took it and had a lot of vacancy. They had a lot of vacancy, a lot of, I guess, bad turnover of tenants. And then it was just really inefficiently operated. The owner had no idea on his rent roll, all this, everything was kind of over his head. And those are the properties we love. So we come in, we have a really good management team. Dan and I are very active owners. So we're going to come in, we're going to bring them in, renovate all the vacant units, and then turn over everything else on a lease-to-lease basis, renovate and bring it back up to the B area that it's in. And those are nice because you're buying it at a discount because of its current state. So we're not buying stabilized assets. We're buying ones that are, 70 to 85% occupied, and then with a considerable margin to actually hit market rents and via renovation, or if you're implementing a like utility bill back system, or just overall just managing it more efficiently.
Mm-hmm. And how are you seeing the rental market? Is it performing well?
Yeah, absolutely. So like just for instance, we were projecting about $750 to $800 a month in our newly renovated units in those buildings, and we're already getting. Well, I guess we haven't. How do I phrase this? We're hitting all of our new leases at $75 over our pro forma. So we've been leasing them at $825 and $875 respectively. So about 9%, 10% greater than what we projected.
Nice.
So
what's right now is like your average return on, if someone wants to invest with you, like what are you seeing right now?
So right now we're seeing about a 10 to 12% cash on cash return. Mm-hmm. And then with over the life of the project, we're expecting about 130 to 150% return.
Nice. What's the life of the project on that one, for example?
5 years.
5 years? That's good.
Yeah, this will be a 5-year-old.
Nice. And so right now also like with the market the way it is, and like you said, supply and demand, some of our listeners and homeowners have been asking like, what if I get approached by an investor, does it make sense for me to sell it, right? Because a lot of investors are trying to buy property, I'm assuming.
Yeah.
But what are your thoughts on that?
So, I mean, having been on both sides, it kind of depends on your situation. So if if you need to get out of your place now, if you're in a bad situation and you need to, cash out, move out, then investors are great because we are more likely to waive contingencies, which means faster closing, cash buyers. That's the quickest way often to money in your pocket, vice the VA loan or conventional loan where you have all your contingencies, your inspection, financing, everything. So if timing's your issue, obviously going with us is great. On the other end, if you're trying to hit a premium and make sure you get as much for your property as you could, investors are usually trying to get it for 90 cents on the dollar, 85 cents on the dollar, 80 cents on the dollar. So usually that offer may not be as strong as an offer as you would get if you went the conventional route of using a conventional buyer and whatnot. So it kind of depends on your situation. I think timing is the biggest factor, I'd say. But if you're not in a rush, then it would behoove you to see what your highest offer would be. And oftentimes that's not going to be if you're just selling your single family home, it's usually not going to be with an investor because we're going to try to get a discount so we can flip it and get a return on our own money.
Yeah, good point. Very good point. So I know that you had bought, every home you've bought right now has been with the intent of investing it, right? And so I know we met through one of your properties you bought that you currently live in.
Yep.
And you wanted to do some stuff to it. So I'll transition to that a little bit so people kind of know how we met and then how, what you thought about our company, et cetera. So you bought this property and you wanted to do what to it?
Yeah, so I bought this, I got a great deal. It's a condo in Bankers Hill. And one thing I really liked about it, great area, great property, just needed a little facelift. So when I got it, I intended on fixing up the bathrooms and the kitchen. First thing I wanted to do was the kitchen. So I reached out to a buddy of mine who had a mutual friend with the Buildsters, and you guys have a great working relationship with the Buildsters. So when I was talking with Erick over there, the first name that popped into his mind when I told him I wanted to do was you guys with Multitaskr. And so went to meet with your team, came over to the property. I was still in escrow, and we had a discussion on what my vision was for the kitchen, vision was for the bathroom, colors, materials, overall design. I asked for their feedback too, because I'm also not a design guy. If you show me something, I'll tell you I'll like it or I won't like it. Yeah. But if you want me to have this big vision and draw it up, I'm not the one. So I leaned on you guys for that too. And then, then we met up a few weeks later or I guess it wasn't even that long, a few days later with the rendering, and I got to walk through my future kitchen.
Nice. Yeah, you did the VR.
Yeah, it was great.
Yeah,
I'd never done anything like that before.
That's awesome. So I'm assuming that's what made it stand out, or what was the main thing that made it stand out?
Yeah, absolutely. Because as a homeowner, I'm looking at obviously pricing. I'm looking at timing. I'm looking at, how well do I get along with your people? Because if you have the best prices, but I'm not getting along with them. There's a personal aspect too. Your team just checked the boxes all across the board. So competitive pricing, the virtual reality was something that nobody else offered, obviously. And then the timeline, at the time when I went through all this, I was still in escrow, and I wanted to minimize the amount of time I was living in the construction zone. And I told them, I was like, yeah, this is very important to me because I'm going to be working from home. And so I can't have it being so noisy all the time. Can you guys hit this timeline? And you guys said, yeah, and then met everything else with pricing, and the virtual reality was great.
Nice. So those were the three things then.
Yeah, for me, yeah, absolutely.
Awesome, yeah. Well, good thing you enjoyed it.
Yeah, absolutely.
Yeah, no, and I know that. We went out before this whole thing, you and I went out to dinner, because one of the things I'm trying to do with clients is, hey, I'm going to take them out to dinner. I'm going to meet them, see what they're about and see if they enjoyed it. And if they didn't, I want to know the truth.
Exactly.
Right?
Yeah.
Because the only way to fix it is by knowing, right? Like we said,
yeah.
I don't want to go when it comes to someone's house that's where you don't apply the 70%. They just go, right? Because it's much different, because super sensitive. It's someone's one of the biggest assets they invest in. And so we wanted to make sure that we understand what the client is trying to accomplish. And so that's how the whole VR thing came into play, talking to clients. And then the pandemic, right? The pandemic really like having people go, I don't want anybody in my house, but people wanted to work with us. It's like, how do I fix that issue? And that's where
virtual reality.
Yeah, that's where it came to my head, and we started promoting it, and it worked. And it's been really, really cool with people to see how they use it and how it makes sense for them, Yeah,
it's phenomenal.
Well, cool. So in regards to, we met, we talked, and then you told me your story, and then you told me how you're investing, and I wanted people to know about you and know what you do for a living with real estate investing. So I know that you guys are launching a new website. And so if you can kind of tell the listeners if they want to go to your website or invest with you or ask you any questions, what's the website?
Oh, yeah, absolutely. Yeah. So my business partner and I, so we just launched, it's hammerandhampel.com. So hammer and then HAMPEL.com. So right now,
Hammer double M?
Hammer double M and hampel.com. So right now on there, we're posting a bunch of stuff on the process of our project, how we're doing, the status of everything, and then also our future projects. So right now we're looking at a couple new deals right now, both in the Des Moines area. So if anybody is interested in learning more about multifamily syndications or potentially investing with us, you can follow us in our journey at that website. So, and just reach out to me on there or email me at morgan@hammerandhampel.com, and would love to get in touch.
So Morgan, did you find the VR experience beneficial for what you went through?
Oh yeah, absolutely. Like I was saying before, I'm not much of the design guy. So going into it, I was like, okay, I've seen all my friends' kitchens. I know which friends' kitchens I like. So I chose one I liked, and I kind of worked it out with, the multitasker rep on what I wanted it to look like in my mind. And then when they came over with the rendering and I put on the goggles and I saw it in real life or in virtual reality real life,
it feels like real life.
I was like, oh man, this is not great. I was like, there's a reason why I'm not in interior design. So it was cool. It was great though, because I mean, I got to see it. I got to see like what I wanted, and then it was very humbling because I also got to see what I wanted look like horrible. So and I made the mistake. I want to say the mistake. My mom listens to this, but I looped her in on the whole process, and she was like saying the whole time, you need to go light cabinets, make your kitchen look way bigger. And I was like, at the beginning, we probably should go. I want to go dark because I like the dark wood look. And then either way, my mom was right. So either way, so I got to see that, like personally. With the headset on, I got to see what my idea like wasn't great, and then my mom's mom was right. So there you go, Mom. You were right.
Best, man.
Mom knows best. Mom, you were right. White cabinets.
Nice. So was that what surprised you the most in the VR? Just seeing that what you thought was good wasn't the best choice.
Yeah, exactly. Because everything what you picture in your mind. Most of it looks perfect. Like but there's a big difference between what you imagine and once you actually put materials where they need to go, the spacing that goes with it, and then all the intricate details that you can't really imagine. At least I can't. I can't imagine all of that. So seeing what I thought I could see in my mind, like in real life in front of me, and like looking around, turning my head, like looking up, looking down, seeing how not just like the colors, because you can put like the nude samples on the backsplash and see what it looks like, but that's not going to show you really what it's actually going to look like once it's built. But once you are in the VR and you're walking around the kitchen as if this is a real kitchen now, you can actually really experience what it is. And I wasn't really expecting that.
Yeah.
So being able to see what I absolutely didn't want, I mean, it saved me, thousands of dollars, and eventually like could be future rents. It could be either me just redoing it because I don't like it that much. So it's the opportunity cost of getting it right the first time, I guess the second time on VR, the first time build is, I mean, it's priceless.
So no, I agree. I think that more and more we get so much good feedback from clients about it, So it's definitely something you think you would recommend for other clients to experience.
Oh, absolutely.
To go through it.
Absolutely.
Yeah.
Another thing too, it's the cost of being able to redo the renderings I mean, it's not
much cheaper.
Yeah, it's much cheaper than putting it on the wall. Exactly. Yeah.
No, it's interesting because a lot of people, they've said, I think the two biggest things we've heard has been, you've saved me thousands of dollars of change orders. Mm-hmm. And the second has been, you saved my marriage. And I was like, what? And they're like, yeah. And it's been said a couple of times already from different clients, because I didn't even think about this. I asked one of the couple that were here, I said, well, why do you say that? And then he goes, well, because my wife was saying she wanted one thing, I was saying I wanted one thing, and then we're trying to define it with like pictures, And so once we actually lived it in our actual space in VR, then we both came to an agreement, right, of what truly made sense. And so it was cool, it was cool to hear that. And we've had clients that have even cried. That was the most impactful to me.
Spent a lot of time in the kitchen.
That have cried like, oh my God, this is my space, and this is how my kitchen looks, or this is how my ADU looks, or this is how my pool's gonna look, stuff like that. And so it's really, really empowering for us too.
Absolutely. See that. Yeah, a lot of memories are made in these spaces.
100%.
So you want it to be home.
Yeah. Great. Well, that's great that you enjoyed that. And there's so much emphasis right now on trying to make that better and trying to make it as simple as they can for clients to pick and choose, and also have prices tied into it and financing costs and future value to it. We're working on that to where, you can switch around your layout of what you're going to remodel, and then it'll tell you like, hey, if you do this, you can sell it for this, So there's a lot of things. So a lot of people will be able to actually be flippers. So if you think about it, some of the stuff that you went through at the beginning that you didn't know and you read about, we actually will bring it in tools in our marketplace so people can actually make smarter decisions.
There's a ton of value there.
Yeah.
Ton of value for investors there.
Yeah. So that's the game plan, right? Trying to become the advisor for every homeowner in the U.S. or future homeowner, and trying to make better decisions. So
love that.
Yeah, VR is one of the biggest tools and
the future.
The starting tool. Yeah,
it is the future.
Yeah. Well, awesome, Morgan. Is there anything else you want to tell our audience, or any tips on investing or anything else?
I mean, I'll give you guys a plug. I mean, my experience with Multitaskr, that was the first construction project that I had really been through at that level. Like I was saying earlier, I avoided fix and flipping because I didn't have the bandwidth at work to manage it. But actually, like living through the construction zone, it was a phenomenal experience. And actually being a first time construction, I was by no means a construction manager, but I felt like it because I was there so much. It was really a flawless experience. The crew was top notch. Craftsmanship was top notch. The project manager was top notch. I mean, cradle to grave, it was a great experience. So I can't recommend your company high enough.
Awesome. Well, thank you. We really love to hear that. Honestly, like I get excited when I hear those things. I actually like to hear the bad things, and some of the guys here in the company go, why do you always like to hear the fires? I go, 'cause that's the only way we get better, That's
true.
If we make, we're not perfect. And so any mistakes we make, we want to improve on and learn from. And, we wish everything goes as smooth as it went with you, but sometimes it doesn't happen. We're human, but we're always going to learn from it.
I appreciate you saving the rough ones for somebody else.
Morgan, thank you for joining us today on Multitaskr Home Solution Network podcast. And thank you to our listeners. We hope you enjoyed learning from Morgan and gained some insight into real estate investing. Contact Morgan, Hammer and Hampel, right? .com, is that it?
HAMMER and HAMPEL.com.
Awesome. And don't forget to visit us at www.gomultitaskr.com. That's without the E, Multitaskr, MULTITASKR.com. Thank you guys. Take care.
Thanks, Joe. Appreciate it.
Thank you. Hey guys, thank you for joining Multitaskr's Home Solution Network podcast. We hope you enjoyed today's episode. And if you haven't subscribed yet, please click on subscribe so you don't miss out on any of our next podcasts. Remember, every single podcast, we're going to give you different advice on how to save time, how to save money, and how to create value. Check us out at gomultitaskr.com. Click subscribe.